Panic as home prices plummet. What's really happening in the housing market? I see headlines everywhere screaming, home values are crashing in half of America's cities. We're going to see 2008 horrible debacle year again. I've been a realtor for decades. I can tell you it is true that home prices have declined in about half of America's cities. Not a big deal. And I'll explain to you in this short YouTube video why it's not a big deal. And you'll feel confident when you see these horrible headlines, doom and gloom, that we're going to be just fine. If you like this video, please subscribe. Panic as home prices plummet. What's really happening in the housing market? We're all seeing headlines that are screaming, plunging prices, home values crash in more than half of America's cities. I can tell you, I've been a realtor for decades, and that's a true statement. Prices have declined and are declining in about half of America's cities. But I'm here to tell you that's no big deal. It's part of the natural rhythm of buying and selling homes. This is a short YouTube video. When you get to the end of it, you'll be convinced and have the knowledge to feel confident not to be concerned about these horrible headlines. Also, if you like my YouTube videos, please subscribe. I do three new YouTube videos on real estate topics every week. All right, so here's the truth. The headlines rarely tell the whole truth. If you're a homeowner, buyer, or investor, you deserve the facts, not fear. So today, I'm breaking down what's really going on behind the so-called home price crash. You'll have the facts and feel confident when you hear that there is a panic about home prices declining. I know what I'm talking about. Been a realtor for decades, a principal real estate broker for the last 9 years, and I've done thousands of transactions. I'm also an Army veteran and an Eagle Scout. My mom was so proud. Also, at the end of this YouTube video, you'll get a link in the comments below where you can download my free PDF file on the 7 tips to keep you from losing money in today's housing market. All right, where does the panic come from? Now, I know what the headlines are saying, but where does the panic come from? Home prices, and it is true, are dropping in nearly half of all U.S. cities. The steepest declines? Places like Florida, not a big surprise with all the condos down there, Texas, California, and other boom and bust markets. Those are the markets that exploded after 2020. But when you zoom in, those drops often mean 2 to 5% decline, not a 2008 year style collapse. And believe me, I was a realtor in 2008. That was a really horrible time. So what's causing the price declines? Rising mortgage rates are squeezing affordability. Yes, rates have gone down a little bit, but they're about double what they were 3 years ago. Most buyers simply cannot qualify for the homes they could have 2 or 3 years ago. For example, a lot of my clients are military because I'm an Army veteran, and I had a client, active military, Marine, and I was able to get him a home, 2.25% VA home loan, fixed rate, 30 years. I had a lot of other clients who were not military, but conventional FHA, 3%, 3.25%, 3.5%. You can't even touch that today and may never be able to in the future. Those were really low rates. Also, combine that situation with sellers who priced for yesterday's market, and boom, we see price corrections. Now, what does that mean, yesterday's market? We were seeing 5 to 10 to 15 to 20% increase in home values every year, have for the last few years. So the people putting their homes on the market now remember that, and they're saying, well, you know what, I can get more money. Buyers aren't paying for that increase, and sellers are having to make a price correction on that. But this isn't universal. Strong job markets with limited inventory, for example, Northern Virginia, where I live, Maryland, or DC, remain pretty resilient. Even with all of the layoffs of federal workers in DC, we're still seeing a median price increase in homes of about 2% a year. Same as here in Northern Virginia and about 2.1% in Maryland. So prices are not going down. They are rebalancing. All right, here's the most important part of this whole YouTube presentation. Why this isn't 2008. In 2008, millions of homeowners had risky loans and no equity. I can give you two examples. I had two clients. They were both selling. I didn't help them buy. One had bought their home for $1 down. $1! And a lender allowed that to happen. They were doing it with a lot of people in the year 2008. What could go wrong with that? So after a few years, some job changes, a layoff, they couldn't afford the mortgage anymore. And that caused the seller, the owner, to reduce the price of their home way below what the market was just to have a quick sale before it got foreclosed. Had another client, again, a seller, he had bought his home also in 2008 using something called stated income. So stated income, which is not allowed now, is where a buyer of a home would simply say, here's what my income is. So they typically type it out. I even had a few people I was working with as a seller write it out on a cocktail napkin. Guess where they work with a cocktail napkin? And they just simply said, this is my income. The lender wouldn't ask for W-2s, wouldn't ask for a 1099 if they were a contractor, and they were able to buy the home. No one was checking anything. Again, what could go wrong with that? And that resulted in a few years of them having to sell their home. And of course, they dropped the price significantly because they had to before it got foreclosed. So 2008 was a horrible year, weak buyers, and no real checks and balances on the lending side. Today, it's much different, totally different, 180-degree turn. Today's buyers are better qualified, and most have locked in historically low rates. So as I mentioned to you, I had some clients 2.25%, 3%, 4%. Those are really low rates. We may never see those again. So those sellers are typically not going to want to sell because if they sell and they buy, they're going to be paying a lot more money in home interest rate than what they're paying now. And a lot of them are not being forced to sell. In fact, when I look around, I don't hardly see any foreclosures. And normally there's a good number of foreclosures in the marketplace, hardly any. So the sellers are strong financially. And what we're seeing now, and this is the one word to describe why we're not going to see a collapse in home prices now, rebalancing. So rebalancing occurring with prices, it's not a collapse. How does this rebalancing affect you? There's two types of people in the marketplace with homes. There's sellers and there's buyers. It really is a very strong buyer's market. So if you're a seller and you need to sell now, pricing smart is everything. You do not want to overprice. And that's one of the biggest reasons why listings today are just stalling, just sitting there. Use a broker who is studying today's comps, as we call them, comparables, not 6-month-old ones. The market is changing. We're not seeing the huge price increase every year. So we're seeing increases of 2%, maybe 3%, maybe even 1%. Half or even 2/3 less than what the rate of inflation is. Another example. Oh, I've got so many examples. I helped a couple 9 years ago buy a home, a large home in Lorton, Virginia. Lorton is off of Interstate 95, and it's close to Quantico Marine Corps Base. They paid $800,000 for their home. A few months ago, they said, the kids are grown, one's in med school. They'd like to have some cash to pay for some of the tuition for their kids in college. And so they listed it for $1.6 million. So $800,000 to $1.6 million. That's double in 9 years. Well, they didn't get it. There was very little interest from potential buyers, reduced it to $1.55 million, still no real interest. So they've taken it off the market, hope to put it back on the market in late spring before school gets out next year. But the expectation of these big increases we saw in the past isn't happening now. Now, if you're a buyer, you're in a good place. prices are softening and opportunity is knocking. There's less competition, more negotiating power. Last week, I helped a Air Force lady, active duty, and she wanted to buy her first home in Old Town Alexandria. I live in Alexandria. Old Town Alexandria is next to me, and it's the older part of Alexandria, but everything's been refurbished, renovated. It's beautiful. It's for younger people, and it's affluent. Obviously, with my white hair, they wouldn't let me live there. So, found a beautiful place for her. The seller had overpriced it. We came in lower. The offer was accepted. And I also got the seller negotiated to give at settlement $5,000 in cash to my buyer client so she could do some renovations. So it was a great place. And this wouldn't have happened a year ago. A year ago, it could not have gotten the price decreased and also $5,000 back. So things have changed, and you need to make the adjustment for that. The key thing here is to do a local reality check. Here in our region, Northern Virginia, Maryland, and D.C., inventory is tight. Jobs are steady, even with all of the changes with the federal government and all the layoffs. And well-priced homes still move quickly. Don't let national headlines talk you out of smart local decisions. And here's the key thing. I've heard it 100 times. You may have only heard it a few times, but it's very true. It's very true, especially with this topic. Real estate is local. Always has been, always will be. Take a look at the zip code you're looking at buying in, and don't just look at the city. So the wrap up here is don't panic. You need to get a perspective. If you want to know what's really happening in your neighborhood, download my free guide, 7 Tips to Avoid Losing Money in Real Estate. And also, you might want to consider subscribing. I'm Tobin Seven, Army veteran and principal real estate broker, bringing you plain speak real estate, where we cut through the noise and talk facts, not fear.